Are you confused about crypto taxes in India? Worried about that 30% tax rate? Or wondering if you're missing something important about the new 2025 rules? Welcome back to Indie Crypto TV. Today we're breaking down everything you need to know about crypto taxation in India for 2025. Whether you're a complete beginner or an experienced trader, this video will clear up all the myths and give you the complete picture. We'll cover the 30% tax, the 1% TDS, new mandatory reporting rules starting this year, and most importantly, what you need to do to stay compliant. Is crypto taxed in India? First, let's clear the biggest myth. Yes, crypto is definitely taxed in India. This became official after Union Budget 2022, when Finance Minister Nirmala Sitharaman introduced the concept of virtual digital assets or VDAs. VDAs include all cryptocurrencies like Bitcoin, Ethereum, NFTs or non-fungible tokens, and DeFi tokens. But it excludes digital gold, central bank digital currency or CBDC, and traditional digital assets. The 30% tax explained. Now, the big question: how much tax do you pay? It's a flat 30% on all crypto profits. This is the same as India's highest income tax bracket. And here's the crucial part: it applies to everyone, regardless of your income level. When do you pay this 30% tax? On three types of transactions. First, selling crypto for Indian rupees or any fiat currency. Second, trading one crypto for another. Yes, even crypto to crypto trades. And third, spending crypto on goods and services. Let me give you a simple example. You bought Bitcoin for 1 lakh rupees and sold it for 1.5 lakh rupees. Your profit is 50,000 rupees. Your tax? 30% of 50,000 rupees equals 15,000 rupees plus surcharge and 4% cess. Important. This 30% rate applies whether you held the crypto for 1 day or 1 year. There's no distinction between short term and long term gains for crypto. The 1% TDS rule. Besides the 30% tax, there's also a 1% TDS or tax deducted at source on every crypto transaction above 10,000 rupees. This has been effective since July 1st, 2022. Here's what many people get wrong: TDS is deducted from the total transaction amount, not just the profit. So if you sell crypto worth 1 lakh rupees, 1% TDS means 1000 rupees is deducted, regardless of whether you made a profit or loss. Good news: if you're using Indian exchanges like CoinDCX, WazirX, or others, they automatically handle TDS deduction and provide you with certificates. New 2025 mandatory reporting rules. Here's the big update for 2025. Starting from financial year 2025 to 2026, that's April 2025 to March 2026, there are new mandatory reporting requirements. You'll need to report all crypto transactions in a dedicated Schedule VDA section in your income tax return. This applies to individual traders and investors, crypto exchanges, and all entities dealing with VDAs. This means better transparency and stricter compliance. The government wants complete visibility into crypto transactions, important restrictions, and rules. Now, let's talk about some crucial restrictions that many people don't know. First, no loss set off. If you lose 50,000 rupees on Bitcoin but gain 30,000 rupees on Ethereum, you can't offset the loss. You still pay 30% tax on the 30,000 rupee gain. Second, limited deductions. You can only deduct the cost of acquisition, no transaction fees, no other expenses. Third, crypto gifts are taxable. If someone gives you crypto worth more than 50,000 rupees, you pay 30% tax on the entire amount. Fourth, airdrops are income. Free tokens from airdrops, they're taxable as other income when received. And if you sell them later, that's another 30% tax event. Mining, DeFi, and NFTs. Let's quickly cover other crypto activities. For mining, mining itself isn't taxed, but earned tokens are business income. When you sell mined crypto, that's 30% tax on gains. For DeFi activities, yield farming, lending, borrowing, all taxable. Earned tokens are business income. Selling generates 30% tax on profits. For NFTs, they're treated exactly like crypto, 30% tax on profits when sold. Same TDS rules apply. Compliance and penalties. What happens if you don't comply? The penalties are serious. For underreporting income, 50% to 200% penalty on evaded tax and up to 7 years imprisonment. For late filing, 1% monthly interest on outstanding tax, 1000 to 5000 rupees late fees, and potential 7-year prison term. For TDS non compliance, penalty equal to unpaid TDS up to 6 months jail time and 15% annual interest on late payments. How to stay compliant? Here's your action plan to stay compliant. First, keep detailed records of all buy sell transactions, dates, amounts, exchange rates, and TDS certificates from exchanges. Second, use CryptoTax tools. Many exchanges now provide tax calculators. Consider professional tax software. Third, file ITR on time. Use Schedule VDA section, report all crypto transactions, and don't try to hide anything. Fourth, pay advance tax. If your crypto gains are significant, pay quarterly to avoid interest. Fifth, consult a tax professional, especially for complex transactions and business level crypto activities. Conclusion. To summarize, crypto is definitely taxed in India at 30% on profits, plus 1% TDS on transactions. The new 2025 rules make reporting mandatory and more detailed. The key is to stay compliant from day one. If this video helped clear your crypto tax confusion, please like and subscribe to Indie Crypto TV for more educational content. Drop your questions in the comments. I read and respond to all of them. Thanks for watching Indie Crypto TV.